Hi everyone, my name is Piterpakulski. Today we're starting a new model. So this will be a customer behavior financial model. So I suppose it is very important model for those people who want to start a new business. The essence of this model is that the business consists of different types of customers, and some of them are entering your business, some of them and will stay with you, for example, for 2, 6 months, a year. Some of them will just make one purchase and quit your business. And a very common mistake made by different entrepreneurs when they create financial models, they forget to exclude some amount of customers from their calculations, which will who quit business model after some period of time while they are purchasing your product or your service. And when this model is not calculated properly, the revenues are exaggerated. They are calculated higher as they are in reality, and we have incorrect simple discounted payback period. We calculate incorrect the amount of financing needed for the business idea. So that's why customer behavior in terms of revenues and expenses linked to this or that type of customer, to link to this or that customer behavior, is very important. And today we are starting this new model. I hope you will enjoy this process. Please give us a like, subscribe, share this video with your friends. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will give you the link to this playlist where I will be keeping all these tutorials. And when I completely finish this model, I will give you all the links in the description of this video as well, so you will be able to watch the whole process of creation of this model from scratch till the final overview. So as you can see, we have an empty Microsoft Excel tab. Let me just make some basic preparations. Let's freeze the first column. And let's start modeling. First of all, let's name our types of customers. So first of all, let's create the first block of inputs and name it types of customers. So this is the first block of inputs. Here we will type of customer. Let's assume that we will have, let's say, 6 types of customers. So this will be, let's say, customer type 1. So we have 6 types of customers. We can name them. So let's create a rule that all inputs in our model will be colored with blue. All other cells will be automatic. So this is the color of inputs. First of all, we need to be able to switch on and off these customers from our future calculations. So we are creating on-off button for each type of customer. This will later affect the cash flow statement, simple, discounted payback period, internal rate of return, sensitivity analysis, everything. So what we are doing, we are creating on-off. On, off. So this will be on, off. For this column, we'll be using data validation. Let's switch them on, all of them. So these are the inputs. I'm coloring it with blue. Now I'm explaining to Excel. So on means 1, off means 0. So if I would like to switch off this or that type of customer from calculations, I will just switch it off. Then let's create the second block of inputs where we will be describing customer behavior. Customers behavior. So this will be type of customer. Here we'll be modeling revenues. So this is customer behavior, type of customer. Here we will be placing our 6 types of customers. So here we are talking about the revenues. So what we are doing now here from left to right, we will be placing the life cycle for this or that type of customer. So this will be the first month of life cycle of the customer, second month of life cycle of this type of customer. So here we are placing the life cycle. So let's assume that maximum
So this is
the life cycle, and here we will be specifying the duration of this life cycle for this or that type of customer. So we'll be specifying this parameter in months. So for example, this customer will stay with us 1 month, this customer will stay with us 6 months, 12, 24, 36, and let's say 10 years. life cycle final. So these are the inputs, so I'm coloring it with blue. Now I'm using this coefficient to get the final value for the life cycle. So if I would like to switch off some customers types, I can do it easily. Then I'm modeling the revenue. So for example, this type of customer gives us $40 monthly. So this is the input. I'm coloring it with this type of customer gives us, for example, the revenue from this customer is, let's say, $130, but it, for example, it's declining slightly, and then stays the same for the other period, for the rest period. The next customer, type of customer, for example, can generate the revenues, let's say $400 monthly, and then disappear. Then, for example, this customer will just pay us $50 once, and then we'll quit our project. Then this customer will be, for example, starting with $3, then it will be growing, then it will be declining, and then it will disappear. This customer, the last customer, for example, we can start with $40, then we will be growing by, let's say, $5 a month, and then his revenue freezes for the rest of his life cycle. So these are the inputs. So let's assume that all of them, all the life cycles will be equal to 120 months. Now, what I would like to do, I would like to add some coefficients for these revenues. I will add a column here. global revenue coefficient, let's say, sorry, local revenue coefficient, then global revenue coefficient. So local coefficient will be 100%. The best value for this coefficient, this will be a percentage format. Then global revenue coefficient will be, we will place it here. And now let's create a copy for this table. Here we will place type of customer. Here we will place customer types from 1 to 5. And here we will write a very simple formula. So we will take this value, then we will multiply this value on this coefficient. Here we will be freezing the column, then we will be adding this coefficient, local coefficient, and here we will be adding this global coefficient. Here we are freezing the cell completely. Now let's extrapolate these formulas to the bottom and to the right. So now let's look what we are fighting for in this case. So for example, I would like to switch off customer number 1 and customer number 6 from calculations. Or for example, I don't want to do that completely. I just want to decrease the revenue on 50%. Or here I would like to say set up 20% of base value of the revenues. Or for example, I can increase the revenues twice for all the types of customers. So these are base values and these are values for scenario play. We will need all these coefficients, these, and these in future when the financial model will be done. We will see the financial efficiency, and we would like to see at that moment how stable our business idea when we will start playing with all these coefficients. So this is very valuable. Will be many steps ahead. So this was step number 1. Give us a like, please, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will give you the link to the playlist where I will be keeping all these tutorials. And when I completely finish this model, I will give you all the links in the description of this video as well. So you will be able to watch all the tutorials from from scratch till a final overview absolutely free. So thank you guys for watching. See you next videos. Thank you and bye.